Today we're going to talk about credit reports and your credit score and the importance of having a good credit score to get great interest rates. I'm Andrew Timms from Loan Market.
And I'm Paul Hixon.
So Paul, tell me about why it's important to have a good credit score.
Okay, so a good credit score will affect your ability to borrow money. If you've got a bad credit score, you may have to go to a second or third tier lender, what we call a second or third tier lender that are prepared to put up with some risks around your default, but that's going to come with a higher interest rate. A good credit score means you can go to all of the banks and get better interest rates because they're less risk. So Timsy, what's a good score and what's a bad score?
Paul, yeah, a good score is a score of 600 and above. Really, a really good score is 1,000 plus. However, if you've got 600 or above, most lenders are going to look at you. Bad credit score, you're typically going to be 500 and below. Most lenders will, certainly the mainstream lenders, will get jumpy if you've got a credit score of 500 and below, and you might receive a decline on your application if it's submitted. So Paul, tell me, what can affect your credit score?
Yeah, good question. So your repayment history on your current loans, the amount of money you owe, those two can affect it. The length of credit history that you've got. So if you've been in the country a couple of years and you've got a short credit history, that's going to affect your score. The number of credit inquiries you've had. So if you have multiple credit inquiries, that's going to really reduce your score. And the types of that credit. So if it's home loans, that's going to be less effective on your score. But if it's things like personal loans or credit cards or car loans, that's going to bring your credit score down.
So Paul, defaults can really affect your credit score. Tell me about them.
Yeah, they can. So a default can be something as simple as you've moved out from a property, you didn't pay the final utility bill, you didn't get a copy of it, and so the utility provider will put a default on you that you haven't paid. It's like a warning sign on your credit report that you've got something outstanding. It's almost a way of them telling you get in contact with us. If you then don't pay that default, it will then get sold onto a debt collector. The debt collectors that will start to again affect your score, and your score will start to drop. And then eventually it can go to a judgment. That all sounds really scary. If you have a small utility default, they happen all the time. Don't panic about it. Get in contact with a good broker who'll be able to guide you through that. The first thing is pay it. Get it paid, contact the provider and get it paid. Small utility or phone defaults, they're not the end of the world. We can get around them. The problem is if you have a bigger default. So if you have a bigger default from a lending institution, if you didn't pay your personal loan, that's going to really affect your score, and a lending institution trying to lend you money is going to look poorly upon that. The size of it again and how quickly you pay it will affect you. So if you missed a payment and then they've chased you for it, that's not the end of the world again. But if you've missed a payment and haven't paid it and you're not carrying on to pay it, you're looking to not pay it, that's going to really affect your score, and in the future will really affect your ability to borrow money. So Andrew, you've got multiple defaults against you, and your creditors are now looking at you and they're trying to wind you up and put you into bankruptcy. What should you do?
First thing you should do, Paul, is seek legal advice. Get some professionals to give you advice around what you should do. If you go into bankruptcy, it can stay on your credit report for up to 7 years, and your chance of getting finance in that 7-year period is next to nothing, nil. So it's really important for you to negotiate, either enter into negotiations with those creditors, try and come to an agreement. If you can't come to an agreement and you do go bankrupt, just be prepared to wait for up to 7 years to obtain finance again.
And so those companies, there are companies out there, companies that fix credit reports for you. So there's companies that negotiate on behalf of you for your default. For example, you might owe 10 grand on a credit card, but they might go in and try and pay 6 or 7 to get that cleared off. Yeah. So let's say your defaults have been paid. Now what? How do you go about fixing your credit?
So we've both got multiple credit repair companies that we've worked with in the past. They do generally come at a cost to use them. However, fixing your credit is imperative if you want to get finance. So, spending that, it could be anywhere from 2 grand to 5 grand as a cost that they may charge you, depending upon how bad your credit is. But as Paul said, they will negotiate with those creditors. It may be you owe 10 grand to credit card. They may be able to get it down to 6 grand and get that wiped off your credit report. If your credit score is not in good shape, I would strongly advise to get in contact with a credit repair company. They will be able to help you repair that quickly. We've listed below a few companies that we've worked with in the past who have helped our clients.
So, Timsy, let's talk about a good credit score. Can you run us through this example?
Yeah, absolutely. So with this example, this client's got a credit score of 1,064, which is excellent. It's top of the range. There's a less than a 1% chance that they're not going to repay their loan according to this credit report. A few headlines: there's no adverse history on the file. They've only had one credit inquiry, so that's applying for potentially one credit card in the last couple of years. They've got 3 accounts opened. There's no default payments in the last 24 months. There's no financial hardship on there. There's no insolvencies or any actions there. There's no business relationships, and there's no disqualified directorships. These all add weight to having a great credit score. Perfect client to deal with. We'd be able to take this client to any bank in the market right now to secure them the best deal. So Paul, you have a bad report in front of you.
Yeah, so this client has got some problems. As you can see, they've got a credit score of 269. They have got a 38% chance of adverse credit. I'd say it's probably higher than that. They've got consumer defaults, they've got more serious defaults, which will be a non-payment of a debt, and they've got plenty of short-term credit inquiries. All of those things are fighting against them. If we look to the headline numbers at the bottom, they've got adverse credit on file, so that means they haven't been paying their loan and they're behind, or their loans and they're behind. They've got 24 credit inquiries. Each one of those credit inquiries is going to damage their score. They've got 6 accounts open and 6 defaults on those accounts. This client is going to really struggle to get a loan of any type, to be honest. So personal loan, car loan, and definitely not a home loan. There's a lot of work for this client to do to try and clean this up.
So Paul, obviously the credit score is not great. Their history is quite poor right now. What could they do to improve that credit score?
Well, they need to start talking to these creditors, really. They've got 6 open accounts with 6 defaults, so there's 6 people they haven't paid. In the background, we can actually see that some of these are quite small amounts of money, so they need to pay those ones off, pay those defaults off. We've suddenly got paid defaults from unpaid defaults. That's going to lift their score, and start to close down some of the accounts. Again, that's going to lift their score. There's got a lot of work in here to repair this. What we've actually recommended to this client is they seek some advice. They go and talk to a credit repair company or a negotiation company who's going to help negotiate them out of these loans. The first thing they need to do is get them paid, and as soon as they start to get them paid and we start to see that time happen, as time goes by, the score will start to improve. In this case though, there's a bit of time that's got to go by. First thing that's got to happen, we've got to get these things paid off.
So Paul, we've looked at credit reports, credit scores. We've informed our audience of what a credit score is, the importance of having a good credit score if you're going to get finance. Yep. What are your sort of recommendations for people to do?
I think so for anybody that's looking to get a loan application underway is go and get a credit report. Now, you might not be ready to buy a property now or get a loan now, but if you go and get a credit report, you can just have a look to see what's on your score. If you've got a good score, fantastic, carry on as you are. If you've got something and there's been a little default happened, which people do get surprised about it. They didn't know that they had a credit card and there was an annual fee charged to the credit card, and they've moved house 3 times and they don't know it's there. They might have a default on something. So get a credit report, find out what it is. Then we can start to fix those issues before we start to make a loan application. We don't want to be trying to find these things when you found your dream home, because we've got more of a battle to get through. So go and get a free credit report. Go to Equifax. They do a free credit report. You can download one for yourself and have a look at the score. Make sure it's above that 600-700 range. And if it's below that number, start to try to repair it.
So as best practice for brokers, we order soft touch credit reports on the clients that we're going to help. Soft touch credit report is a credit report which doesn't impact your credit profile. It just allows us to look at exactly what the bank is going to be looking at. If there is issues on your credit report, don't be alarmed. Just reach out to your local broker and we'll be able to help you address those issues and put you in a good, strong position to apply for finance in the near future.
So, Andrew, if there is something on the report, just a small default or something, don't go into your local bank and ask for a home loan. They won't have multiple options where you can get approved. We've got lenders that don't use credit scores. We've got lenders that can get away with a small credit score. But if you just walk into your bank and make an application, you could get declined. Go and see a professional, go and see a mortgage broker, your local mortgage broker, and they should be able to help you get past that issue.